All righty.
There you go.
Okay. In the classroom, it's me and Michael, and then let's kind of see who we've got online today. If I can get the link going. All right. So we should be pretty good there. Hello, Benet. Hello, Janice. Just kind of, if you guys are online, just go ahead and comment, and then I kind of know who's there and make sure. I just keep track of, the different questions that you guys might have. So let me know if you've got anything that you want to chime in on or questions as we go through some of the industry partner stuff. Okay, so we got Michael in the classroom today, and then let me know, you guys online, you should be able to access the PowerPoint just by going into the calendar. You can link to it that way too. Or I can just send you a copy of it. No worries that way. Okay, so industry partners, we kind of decided this is a newer class. We went over kind of what was on the calendar over the last year and decided we wanted to come up with some additional content. And so industry partners was one of the ones that we wanted to cover. We kind of wanted to focus a little bit more on what it does to help an agent, be really successful in the long term. And industry partners is a huge piece to that. I'm sure Michael is like way experienced, and so you get the benefit of what that brings. Come on in, sign in. Got a few more people coming online. I love it. So I kind of pulled the majority of what we're going to be talking about today from the 100-day action plan. So some of you guys that are newer, either to the brokerage or just to new agent training, you'll get weekly emails of different topics in that 100-day action plan. So you can kind of circle back to any of this. I refreshed it a little bit, tried to make it a little bit more focused, but that's really kind of what I'm building all of this on. In the future, I was mentioning, we started out, I mentioned this is kind of like one of the newer classes that we're doing right now. So we're still kind of putting it all together and making it flow a little bit better. In the future, the plan is to have 2 or 3 industry partners that we kind of rotate through so that you guys, can network and kind of start building, your base that way. Michael, how long did it take you to really get, all of your kind of team together, for lack of a better way to say that?
Still working on it.
Okay, yeah. I mean, it's always evolving, right? Come on in.
The goal is to work with every escrow officer, title company.
Yeah.
That way you're doing a lot of deals.
Yeah. And then we've got Tyler here too. Yay. Yeah. Whenever. I'll leave you. Yeah. I'll leave a bunch of time for you. I just we're going to go over why you want industry partners, really. Kind of some of the key ones that you'll use when you're brand new. And then that will segue into what you have to say about the mortgage piece of that. Okay. Yeah. No, but I agree with Michael. It's something that it just kind of evolves. Like I would say the first few years that I was doing some transactions, I didn't think twice about staging and, some of that stuff. As you get kind of some of the basics down, you get a little bit more comfortable, with the process. You kind of start looking for ways that you can set yourself apart, right? Okay, what value adds can I bring to this? What's different than what the other agent, did the last time this property was listed, so that you can, kind of stand out in this client's mind. And that's kind of where I started adding in, oh, you know what, actually it's worth it for me to, if I'm getting a decent commission, I cover light staging. You know what I mean? I want my listings to kind of look a certain way. So I've kind of added stuff as time has gone on. And I think, a newer agent will probably take that approach most likely. It's also a little bit of a money thing. You don't have a bunch of money right out of the gates. And so you're trying to keep those costs a little bit minimal. But I would encourage you to really look at ways that your industry partners can aid and give you that value proposition, especially with everything that's happening, with NAR, how co-op fees and that type of stuff might kind of evolve a little bit and everything. The one thing you can control is the conversations that you're having on what you bring to the table. Why does someone want to use you? You know what I mean? What are you doing? And so this is where industry partners is huge, and can really help you give the client that experience that they're looking for. Otherwise, anybody can do that. The listing agent could do that. What am I getting from you? Why do I need to maybe even pitch in on your commission if we get to that point? Who knows?
One note.
Yeah, Michael.
So it's really important to have more than one.
Yes.
And to have people that are different personalities and communicate in different ways.
I love that. Yeah.
There's 4 personality types, and a driver talking to an expressive, a driver who's a lender talking to an expressive who's a buyer,
yeah,
is going to disconnect, and it's not going to work well. So
good.
You don't always have to give 3. Everyone thinks you have to give 3 referrals in order to be protected. All of
yeah,
that kind of
yeah.
stuff. That's not really true.
Yeah.
You give, but you want to have people that you can match to, especially with title officers, escrow officers, things like lenders, even home inspectors, how they communicate with the client is super important.
Good.
So, we tend to stick with people who are our type of personality type.
Yeah.
So we deal with people that are in all different types.
Yeah. Yeah, it's really important to be able to adjust, to know, oh gosh, the person I'm dealing with right now is like all about the details. The mortgage person is definitely going to need to be Bluebird, because they sit and they're going to go through and, give them all the different options. So I appreciate what you're saying. If I had someone who was a little more, time, like I'm like this, like, okay, get to the point. My like, I got to go to the next thing. Do you know what I mean? And sometimes that comes off. I have to be careful, that people aren't worried, that I'm just rushing through to the next thing. But for me, it's like, oh no, like tell me quick. I can process quick. Let's go, 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 go. And so when I get someone who wants to explain everything and all the details to me, I like check out, So yeah, it's really, really important to pick up on those subtleties. Again, we're trying to create an experience, a positive experience. Hey, I'm going to take the load off of you. I'm going to make this fun. Do you know what I mean? What has the potential to be stressful and, make you crazy. It's my job to like kind of carry the load on all that, so it can be fun for you. I want this to be great, And then you've got your client for life, right? Okay, any other comments? Amy, I can't hear Michael very well. Oh, Janice, Michael was just talking about the importance of making sure when you have, your industry partners, you have different personality types that will work well with your clients' personalities. So it was a great, great point. Okay, so let's kind of just start moving through some other little tips that I've got here. We're talking about, how your partners can really make a difference in that experience and the value, that you're going to add. So boosting your value proposition. And then I would say, as you get a little bit more established, you'll start to see that your networking and all of these partners really do start to bring business back to you too. And that's where you get into the relationship piece, of real estate that can keep your pipeline full. And so industry partners, vendors, my sister used to be into staging. That's kind of one of the other things where I started thinking about staging and its benefits a little bit more. And just from me, like kind of, opening the doors for her on certain, other new agents or whatever that were looking for that piece on a listing, I got business back from that too. So that's just kind of the natural, progression of how that would work. So that's another benefit to creating, your little, I mean, in the old days, we would have had a little Rolodex, I mean, I don't know what we would call it now. So wherever you want to keep those in your phone database, I guess, right? Okay. So let's kind of springboard a little bit more off of what we're looking for in partners, in addition to, these personality types, how they're going to integrate with different, different needs for different clients. I would also mention, look at the level of experience, that's going to be important, because this is a reflection on you, right? So if I say, hey, I think you should use this photographer. I've had really good experience with them in the past. They turn around the pictures really quick. Your goal is to have this listing up in the next 3 days. And I know that this photographer is going to make it happen. Plus, here's some examples of, what they've done, in the past, blah, blah, blah. And that doesn't happen. That's a reflection on me now. And so you really want to be choosy, with people and what you're promising, so that it puts you in the best light. Professionalism. I would say probably the number one thing we hear at the brokerage here all the time about agents is, why won't they pick up their phone? Why won't they just, call? Everybody kind of just loves to sometimes text or email because it's a little easier, faster, whatever. But really make sure, your level of professionalism is there for your clients, and industry partners can help with that, right? We want to send people to the experts for things. If there's a title question, if there's a property with maybe some sort of, weird setbacks, or I can't think of the right word, an easement, thank you, something like that. You want to have, your people that you can go to and connect the client, to get the answers, that they want on some of those situations. So that will be a good thing. And then I would say too, when you're new, sometimes it's hard. You don't really know what you're looking for yet. And so really just take, the Facebook group sometimes, if you search like, who's your favorite title, person, or who is your favorite inspector, you'll get lots of people chiming in on that. And then you go vet them. Kind of what Michael's saying, like their way that they do business, or their personality type, or whatever. There's no wrong answers here, probably. I mean, there's very, very few vendors that I've come across that are just like nightmares, but there are a lot of choices out there. So really go figure out, how they work with you. Can you trust them? Are they, a lot of times for me, are they going to pick up the phone and talk to me when I need their help, or am I going to have to wait 2 days to connect with them because they're so busy, doing other stuff? So sometimes the people that are the best may not be the right fit for me, because I want someone that's accessible too. And so maybe they're so successful that they're a little bit too busy for me even, so I kind of look at it from that perspective as well. Any thoughts from you guys or questions? It's pretty straightforward stuff. So let's kind of go through, I would say on this side, keep in touch with your business partners. A lot of times when you're planning out your week or your time blocking for the day, when you see that you've got, gaps, okay, I made my calls, I wrote my thank you cards, to people in my sphere, and you've got all your different activities that you're doing. When you've got some gaps there, that's a great chance just to reach out. And if you don't have a lot of industry partners, you haven't built those relationships yet, start making phone calls, start making those connections, meet title companies, mortgage companies. They all want your business. They want to meet with you. They will make time, to go have coffee, or, hey, you want to meet for lunch or something like that? I want to pick your brain maybe some ideas, for marketing or different things like that. So work those relationships as you're trying to build that database of your partners. Work those into your weekly planning. Try to meet with maybe one industry partner a week, like set a goal of what you want to do that way until you get to that point. And then you're going to maintain those relationships. Then you're going to continue, to meet with them, or, and that might just be happening because you're in the middle of a deal, or something like that. But make sure, that's part of it. And I would say the partners do an amazing job of expressing gratitude. I mean, all of the gifts that we get here at the brokerage for different agents, title companies, lenders, they're always leaving, little closing gifts or just, a little card. So I think sometimes we, in the real estate piece of the industry, forget also, to show that gratitude to the partners that are making our jobs a little bit easier and making us look good, Okay. So, yeah, and then we talked a little bit about how this will come back, on the referral piece, the industry. So you get the benefit of the partners and everything they're helping you with, but that's also going to build your networking, build this referral process, which eventually is going to be a key component to your business, where you just get to a point that it kind of feels like things are just falling in your lap because of these relationships that you've created. You want me to go back?
Yeah.
Okay.
One thing that I've had agents do that's come back to bite them is that they overcommit to one person in the beginning.
Okay.
And, that they put all their eggs in a basket, and that partner doesn't work out.
Okay.
So don't marry the person on the first date.
Okay.
So, get to know them, give them an opportunity, see how they respond to it. But we tend to pick that person, and we get married on the first date, but then all of a sudden, we're divorced in a week.
Or you have a sticky transaction, you know what I mean, where something uncomfortable happened, and then how do you move forward from that? Yeah. Yeah.
So it's a process of interviewing, seeing how they do, and then developing that relationship based on their actual results.
Good.
Because,
yeah, and again, another reason why you want to have 2 or 3 options within, your different fields, because unfortunate things do happen sometimes, or maybe someone leaves the business, One of my favorite lenders at Bluebird used to be Justin Westover. Do you know what I mean? And he decided, to kind of go in a little bit different direction, and so I'm like, oh no, but it's fine. I've got other people that that can make that happen. But yeah, you're going to constantly be adjusting, as things change with your partner list. So yeah, I like that. Okay. I do like this one about on disclosing your personal interest. Make sure, just because of code of ethics and everything, make sure if you do have, someone that you're constantly, oh, hey, this is my sister, but she does a great job. I think you're going to love her. I would always, kind of clarify the relationship there if I felt like it was necessary, and people might kind of, second guess my motivations there. So be transparent. People usually, it's usually not off-putting to be a little bit more forthcoming, than someone feel like you were trying to pull a fast one on them. Okay. So what are kind of some examples? We've already mentioned lenders, title companies. And then we do a whole class on inspections and the inspection process and bring in different inspectors. So if you want to go into, the Silver Creek, the new agent playlist there, you can kind of see some examples. of some of these other partners that you'll use a lot. I really like having a handyman in your back pocket too. I don't know if you guys have run across any deals where, you know, just having someone, you know, that you can call real quick. Hey, we just have a few, you know, little items that we need to knock out. This is like stressing everybody out. I mean, sometimes if, you know, it's not like you're asking someone to do $5,000 worth of repairs. You know, a lot of times there's just a few little things that need to happen, and it's kind of a nice gesture for the agent to say, hey, why don't we just use my handyman, or even, you know, if you feel comfortable with it, oh, I'm happy to pick up the cost for this. You know, let me do that as a gift to you. Like, I'll do that on occasion if I can tell. It's just people will fight over lawnmowers. I say this all the time. You know, I mean, it's fascinating what's going to hold up a deal, and you can just kind of know, oh, let me take that off your plate. I've got that covered. Again, though, you want to make sure this is someone you trust, because it's a reflection of you. So make sure the people, you know, that you're bringing in to problem solve and to save, you know, everybody some stress, it's not going to cause more stress, right? So, okay. I know, like, for a while there was a team that was one of their big value adds that they were bringing to listings was the movers, the truck, you know, hey, and so they went and put, you know, the wrap on the side of a little U-Haul and hired, you know, some little college kids to kind of move people and help declutter the home, you know, that type of stuff. So get creative, you know, with some of these partners and relationships that you want. It's always better to show, you know, what you're going to bring to the table. That's a better way to create longevity in your business than, oh, I'll give you a discount, or, oh, here, let me give you $2,000 at closing. That doesn't necessarily make you stand out. I mean, people love money. Do you know what I mean? But the reasons they're going to want to refer you to their friends and their family and come back to you later on is because of the extra stuff that you've done. That's going to create more of that relationship. So try to find, you know, things that you can do that's again set you apart. Any thoughts across that, or other agents that you've seen utilize that tactic rather than, oh, I'll be the cheapest person you can find out there? Because I see that with a lot of new agents. That's where they tend to want to go. Oh, I'll give you, oh, no, I'll help you. I'll give you money back. And it doesn't last very long, you know, because then that type of client, that's just what they're looking for is, oh, well, who will give me a deal? And it becomes about that instead about you, your expertise, your knowledge, your negotiation skills, you know, all of those things. You want your business to be about that, if that makes sense. Okay. Any other comments online? Do you guys have anything you want to add? We'll just kind of keep moving through the slides here. I would say too, like, oh my goodness, lately, so many new agents that I've talked to that are working with sellers that need to list because of divorce, because of death, you know, of a spouse, or we're taking over grandma's estate. And there's been a lot of probate issues with a lot of new agents I've been working with. So you'll get just kind of the experience as you move through, you know, some of these scenarios. You'll start, you know, kind of connecting with a lot of people that way. So I know one agent that probably saved the seller thousands of dollars just because she recommended an attorney. Like, everybody, all of the family was telling her one thing. Nope, you need to do this and this and this. She's like, you know what? I want you to talk to this attorney. I've had a similar thing. I want you to shoot all this past an attorney. Attorney was able to save them like thousands of dollars just by moving, you know, everything into a trust. You know, they avoided a lot of taxes, that type of stuff. So you can really become the hero. You know what I mean? If you're understanding, you know, some of the things to look for and ways that you can, you know, add value for sure. So eventually, remember I said this is like my pilot program. So normally I would have like an inspector just kind of talk a little bit about the benefits of doing a home inspection, you know, kind of give a little plug about that. We have a whole class, you know, that goes into that. So I'm not going to spend a lot of time on that today, aside from make sure you've got kind of what to what Michael was saying, make sure you've got 2 or 3 people that you know, you can kind of throw out there. Some buyers will already have an inspector in mind. Oh, nope, I want to use Bentnail, or I want to use AAD, you know, I mean, whoever it is. And then that's great. Then you kind of, you know, I'll usually facilitate that. Like, okay, let's pull up their calendar. If they happen to have a calendar online, let me call them real quick. And so I'll kind of help make that happen. But at the end of the day, you know, they're going to be, you know, their name's going to be on that inspection. You'll be tied to it, but that inspector is going to most likely, you know, just send them over a report through like an email address or a portal or something like that, so that they can pay and everything that way. I find that most of the inspectors I end up working with, it's more about who's available than the actual inspector. So that's another reason why I like to have 2 or 3 in my back pocket, is just to make sure, you know, we can meet the timetables that we need to. Okay. I talked a little bit more about staging. The stager that was going to come today, just to kind of talk about, you know, the benefits of maybe having that, you know, as part of your listing presentations, wasn't able to get in here, but I can get you contact information for a couple different stagers if that is something you guys think, you know, would be beneficial. But really, she just kind of wanted to touch on how important it is to invest a little bit. You know, you got to give a little bit of money to get money. I mentioned for me, if I'm making like a decent commission, I'm not fighting the seller, you know, nickel and diamond over, you know, what they're trying to net and everything, then that's one of my things that I say in my listing presentation is, hey, you know, my fees, when you're paying me X amount commission, you know, I'm gonna share this much here, and then you know, this gives me enough to go ahead and cover light staging. If you feel like we need to go bigger, you know, you want to move everything out, then of course, you know, I've got some competitive costs there, but I'll cover, you know, light staging for, you know, so that the kitchen, usually it's your kitchen, your living room, your master, you know, you want that looking really dialed in. Why do you guys think staging is important? Chime in. It looks nice. Yeah, it's clean. It's like, it's relaxing and everything.
A lot of people are, I don't know, decorators. Their stuff doesn't always
Yeah.
go well together.
Yeah.
Walk in and judge that instead of the house.
Right. Yeah. I think when it's staged right, it appeals to a broader base of buyers. Stagers are really good at coming up with that little aesthetic that's just appealing to the most amount of people. It's not too contemporary. It's not too modern. It's not too traditional. It's just kind of right there in the middle, and people can picture themselves there, right? They can picture their stuff there. And so I would say that's probably, for a new agent, that's one of the hardest conversations. You're not super, super great yet at having that confidence, you know, to tell the seller, hey, I want you to clean everything off the counters. I want all of the plants down from the plant shelves. Nobody likes a plant shelf, you know? I mean, it's like, it's hard to do that. So sometimes having the stager come in and say that, not that I want you guys to be weak and not stand up for yourselves and what you know, but it's a little bit easier to kind of, hey, here's this expert, and here's, you know, their take on what it's gonna, you know, what we're gonna need to do to put this listing, you know, best foot forward. So I do believe in coughing up $1,500. Just make sure when you're doing your rep agreements, you know, you have some sort of a cancellation fee where you can recoup that cost if you need to. So I think that's probably one of the most underutilized pieces in marketing, because all of those pictures are going to be out there. They're going to be on Zillow. They're going to be everywhere. And then you're tied to that. You're represented with what that home looks like. So make sure, you know, you're doing your best to show what a listing looks like, you know, when somebody lists with you.
So there's something to think about when you're thinking about a buyer who's looking at a property.
Uh-huh.
Those buyers have gone into the new homes
Yes.
and they spend, you know, 80 to 100,000 plus per model to stage those sometimes. And then they go into a resale and they see how people, you know, something that's just like lived in.
Right.
And they already have that mental expectation of that fully staged, brand new, clean, nothing anywhere.
Yeah.
You know, to that. So
Yeah.
It helps buyers because they already have that expectation.
Right.
That unrealistic expectation up front. Because even when they buy that home, that they saw the model, it's just white walls.
Right.
So,
right.
But it's a good way to be able to explain that to a seller, that the buyers are seeing like the staged homes, the tour homes, and things like that are like totally freaked out.
Yes. Yeah.
And then they come into something that's 10 years old, and they want it to look the same as they see on HGTV,
Yep.
as they see on the tour of homes and all of that kind of stuff.
Right.
So we want to get as close as we can to meeting that expectation.
Yeah.
So they look past the decoration and into your floor plan, your neighborhood, you know, all of the things that they're actually buying.
100% agree. And I think the standard was raised when everybody, you know, got into like fixer upper and, you know, I mean, love it or list it, you know, I mean, that's the expectation now. And we also 2 years ago, you could just put a sign in the yard and someone was going to buy your house and it didn't matter how much time and energy you put into it. They were happy just to get something. And that's not the case anymore. People have to stomach a little bit higher interest rate than they were used to over the last, 5-6 years. I don't know. You would know better how long, you know, rates have been.
3-4 years.
Okay. Yeah. And so we're already trying to overcome that hurdle mentally. And if the home doesn't just look like $1 million, they're kind of like, why am I doing this? You know, there's a reason why new construction sells more quickly, sells for a higher price point. It's because you walk in and it's just like perfect. Yeah. Hopefully you guys could kind of hear that conversation online a little bit, but I think you probably got the gist of it. Your money is well spent with a little bit of staging, a little bit of prep, you know, having that home, you know, look as good as it can, or adjust your price accordingly, right? So if your buyers or your sellers, their expectation is we're going to sell at the top of what your CMA was, then you better make it look like it deserves to be there, right? Okay. And then I think we've talked a little bit about title. Again, there's a whole class on this. I did want to bring up, a lot of people forget about the benefits of some of the additional services that title can provide. They will give you neighborhood lists, you know, do mailings for you. So make sure when you're creating, you know, your partner list and everything like that, you've got a couple different title people. Again, they want your business. They'll sit down with you. They'll explain everything that can help you, you know, get leads, you know, different postcard campaigns, stuff like that. So really take time, you know, when you're planning your week, at least one industry partner meeting a week when you're getting going is really, really going to help you take advantage of some of the stuff that's out there for you. Okay. And now we go to Tyler so he can talk to us a little bit. I've got a lot of questions like mortgage related, so I gave him a few kind of different topics that I see come up a lot. There's your little mic.
Okay.
And I'll just let you.
And then, so there are a bunch of people online, you said?
Yes, I've got them right here, so I will monitor. So if you guys have questions on what Tyler's talking about, I can see the chat and I'll pass it along. I'm still in your chair.
Okay. And then I did, I can send this out. We do what's called a pre-approval Zoom call that with all new borrowers, once we get them pre-approved, and it just kind of goes through a list of the whole process. And then I'll email this to everyone also so you can see kind of the process that we go through, but I'll give you the steps as well if you guys want that.
I can pass them.
So why is it important to qualify a buyer? You know, as a new agent, the most important part is actually not a new agent, any agent is making sure not only you have a qualified buyer, but I think the big thing today is with interest rates, even if it's not a first-time home buyer, people need to know what their new house payment's going to be, because every single person that comes in to get pre-qualified with us, you know, the question we ask is what do you want your house payment to be? And everyone says $1,500 to $2,500. Well, that just does not exist anymore. And if you have somebody that's in a house that's at 3%, and even if they have $500 in cash for their next buy, they need to get used to what that new payment's going to be. So I would definitely recommend having anybody you go drive around in your car, make sure they've talked to a lender first and that they're fully pre-approved and they know the price range and what their house payment is going to be. Because we've had tons of even past clients that once you send them numbers of what it looks like today with today's interest rates, they get skittish. And so I think it's super important to make sure you're working with qualified buyers and they know what their house payment's going to be on the price range that they're looking into. The other thing you wanted me to go over was loan types. Basically, for loan types, you have conventional loans, you have FHA loans, VA loans, USDA loans. Those three are all government products. And you know, VA used to kind of be a negative thing for sellers. I don't really know why. Maybe because there's some costs that the seller ends up paying, but the seller usually ends up paying a lot of different costs in any transaction now. So I would never shy away from a VA loan. VA loan is a great product, and they've changed it a lot over the years. What other, you know, you have fixed rate loans, you have adjustable rate loans, you have reverse mortgages, you have jumbo products. Jumbo now, the new limit for 2024 is, I think it's 766,550 in Idaho, but it is by county. So Blaine County, I think Blaine County may be the only county that's higher now, which I think it's closer to 900,000 in Blaine to be conventional. And everywhere else it's that 766. Anything else on mortgages, mortgage types that you want to have questions on, or is there a way for me to see questions?
Yeah, I can see if they come in here. I would say like a couple weeks ago, I was getting a ton of questions about appraisals with FHA, VA, how long does that stay with the property? Like a lot of agents kind of trying to understand that.
So like if the appraisal was supposed to come in low, or is that what you mean? Or
yeah, and then okay, if this buyer, you know, if
backs
everything
out,
falls apart, they back out, does that appraisal stay with the property now?
the appraisal doesn't necessarily stay with it, but I think as an agent you have to disclose that.
FHA, it does. FHA and VA, it stays for 6 months. So that value is set for a 6-month period.
Right, which doesn't mean you have to pay that lesser amount. I mean, if you have another buyer and they're going conventional, they can pay that higher amount. It's just they need to know that the appraisal came in lower and they need to be comfortable with that. So it doesn't mean you can't get financing for a higher amount on that, but it is going to have to be disclosed.
Yeah, yeah. And if your new buyer ends up falling in that same VA loan category, then maybe you're kind of back in the same boat with this value again.
Yeah.
Yeah.
Right. The only time you have to disclose it is if it's another VA buyer or another FHA buyer. If it's a conventional or a VA and now you have an FHA,
Yeah.
there's no duty to disclose an appraisal because it's only an opinion of value at that time and space.
Mm-hmm.
So there's no, there's no requirement for a seller or for an agent to disclose. We had an appraisal done and it came in at that, unless it helps you, right?
Right.
Unless it came in higher than what you're asking, then you can say, hey, we were able to get an appraisal higher, but the seller is still willing to negotiate. But if it came in lower, the only thing you have to worry about is a VA buyer on a prior VA appraisal or an FHA buyer on a prior FHA
For 6 months.
Yep.
for 6 months.
Got it.
That came up recently for me. What other lender questions have I had? I'll think while you keep talking.
Okay, yeah, so the other thing you wanted me to kind of talk about was just the steps, which is on that, it's the second page of that form. Basically, step one is we look at their financial situation, their income, their assets, and what an investor looks at is basically their installment loans and their revolving debt, student loans. They don't want their house payment and all those debts to be over truly a back-end ratio of 42% of their gross. And but what we like to go over with our borrowers is that might not be all their debt. A lot of things that are not even included. So we do a budget with our clients so that they include things like car insurance, cell phone bill, internet, cable. All those things aren't part of what the investor looks at. And so we think it's a good thing for all buyers to look at all of your expenses before you go commit to a property, so that you are living within your means, really. So basically, after we go through debt to income, we have them pre-approved. Everyone wants to know, well, what's my max? We tell them what their max is, but we don't provide like a pre-approval letter until they're going to put an offer on something, because say you're pre-qualified for $750,000, but your dream house is $685,000. You don't want a letter going to that listing agent showing that your buyer is pre-approved for $750,000 if you're only going to offer $685,000. There's no reason for that agent to know that they're pre-qualified for more than that. So we always make it specific to what you're going to offer on the property. After they find their house, basically first step is inspection. And a lot of buyers don't understand the difference between inspection and appraisal. And super important to let your buyers know, one, it's an upfront cost to do an inspection. And an inspection, I think, is still in the $400 to $500 range. And even if it's brand new construction, it's still recommended. We still recommend you do an inspection. because there's stuff that could be missed by, local inspectors. And then that inspection, your buyers need to know, okay, this is an out-of-pocket cost that, shows you everything that's wrong with the property. An inspector will go in and spend 4 or 5 hours in the crawl space, in the attic, every single plug-in. They spend a lot of time in the property, and they let you know anything possible that could basically cause financial distress to a buyer. So, that is super important. The appraisal is for a lender. It's for me before I give money, and all it really is doing is saying, based on square footage, area, size of the house, and where you are, yes, that value is supported by recent sales. So it's for the investor to know that they're lending money on a property that is at a good value. So after the inspection is typically when the appraisal is ordered. If they okay everything on the inspection, yes, it's good. We're okay with these things that are wrong. You give me the go-ahead. You give your lender the go-ahead. Okay, let's order the appraisal.
Does the lender have to see an inspection? Like if you don't do an inspection, is the lender worried?
No, we rarely see them. In an RE10, as an example, if there are some things that are wrong, and on the RE10, you've decided, okay, we're going to get a $4,500 credit from the seller. Well, lender really still doesn't want to see that inspection because it's going to open a can of worms. So typically what we do is we say, it's probably best to do an addendum. Say, you don't even have to say why, just say, seller credit $4,500 for buyer's closing costs. Leave it at that. We use that. We never see the inspection. As long as the buyer is okay with the inspection, we're okay. So yeah, we don't like to see inspections because typically it causes problems.
And for everybody listening, just to clarify, if there is an RE10, you do still need to send that over. But yes, we don't want to reveal more than we have to. It's
Yeah.
just not necessary.
Yeah, most lenders I don't think even ask for them.
Yeah.
So where was I? Appraisal, make an offer on a house, you've already made an offer on a house. After the appraisal's done, basically we take the appraisal and all the financial information of the borrower, that goes into the lender. The lender looks at everything and says, everything looks perfect, except we need an updated pay stub. There's some final conditions or something wasn't done on the property. You might have to send the appraiser back out. Last minute things that happen. We typically try to send the CD out, the closing disclosure, 4 to 5 days before closing, just to be safe. So there's usually a few things that still need corrected on that closing disclosure, but your borrowers with the new guidelines have to have that CD 3 days prior to when they actually can sign the documents at the title company. So we do a CD review with every borrower, send them the CD, do a Zoom call, go over the numbers. Okay, yes, we need to change this, this, and this. Then at closing, we've already pretty much gone over everything with them, and then closing goes smoothly at the title company because you've gone over closing costs and out of pocket and what they're going to need to come to the table with, and then closing goes smoothly. The other thing that buyers need to know is as far as funding, it depends on your lender and who you go to. But if, if you sign before 10 in the morning, a lot of times you can still fund that afternoon. But if you're not signing, this is always confusing to borrowers. If you're not signing until the afternoon, it's not going to fund until the following day. And every wire that goes out in the US goes through the federal government. So the wire goes to the government and back. So you don't know when that's going to fund. It could be by noon the next day. A lot of times it doesn't happen until 3 or 4 in the afternoon. And then the title company gets the wire, they get the okay to record, and then they take everything down to the title or to the county, and then it's actually recorded. That's when the keys become available. So we tell all of our borrowers, don't order the moving truck. Don't do all these things too early, because it could cause issues if there's any delays. After funding, you get to move in. That's when you get your keys. Uh-huh.
Between step 2 and 6, so pre-approved, you haven't done any credit checks, or you're just kind of
No,
going off their verbal?
So pre-approved, that kind of will depend on your lender also. So people say pre-approved or pre-qualified. We pre-approve everyone. When we do a pre-approval, we pull credit. We've looked at their income and assets, and typically we've even run it through DU, which is a desktop underwriter, which is Fannie Mae's underwriting system with all the parameters in there, and we've got a approve eligible back.
And you're saying not everybody does that?
Not everyone does that.
So make sure you know which.
Yeah. And so you need to have a good relationship with your lender to know that you have a qualified borrower. You do not want to waste time driving somebody around and then find out later that they don't qualify for what they're shopping for.
As a listing agent, you want to make sure that you always speak to the buyer's lender before negotiating an offer, because it may be, hey, we talked to them on the phone, it sounds like they might be able to get a loan, but we don't have anything from them.
Yeah.
Or it's going to be, hey, I have everything in my file I need to close. I can do it on Friday. Today's Thursday, but so it's going to go either way. So it's imperative to know the difference as a listing agent too, and to be able to have that conversation as you're negotiating offers to see which lender actually has the information to get an approval for that buyer and which ones don't, because it will be completely different sides of the spectrum.
For sure, yeah, and that we do a letter specific to what you're going to offer, and then we also offer, hey, let me know who is the listing agent. Let me know who it is. If I know who they are, then my letter's going to be fine. But if it's somebody I don't know, if you want me to call and follow up after you present your offer, happy to call the listing agent proactively and say, hey, I've worked with these people before. They're totally pre-approved, solid deal, just to give them the warm fuzzy, and that could help that offer go through.
And that's a question I get all the time from a newer agent, and sometimes even halfway through the deal. Oh, am I allowed to talk to the lender? Do you care if an agent calls you and wants to talk about, kind of like what Michael's saying? Hey, I'm the listing agent. What can you tell me about the buyers? Like, does that annoy you as a lender?
No, I think it's great. I mean, those are the agents I want to work with.
Yep.
The ones that are progressive and want to know that they're protecting their borrower or their client, their seller.
And I think a lot of times when you're a new agent, you're like, oh, that's like, I'm not allowed to go over there. That's confidential information. No, it's your job to vet all of that for your client and
Yeah.
make sure we're not all wasting our time.
Yeah, and we can't give specific information, but we can say, yeah, they're totally pre-approved. And,
Yeah.
I'm not worried about income or assets. Their down payments in their account, we can give lots of information without specifics.
Yeah.
Like Lacey Bishop, who's one of the biggest agents in town, anytime we have a borrower that submits, we get a call from them within an hour. Hey, can you tell me about this borrower? So they ask on every single listing. And we just know that's going to be coming.
Yeah, that's a good agent.
Yeah.
Yeah. Any other questions from online about lending that you guys have for Tyler?
I'll just tell you a few other things that we go through with every client is we now do an opt-out pre-screen. So we think it's good for borrowers to shop, make sure they're getting a good interest rate. Truly, we all get our rates from the exact same places. So really it comes down to customer service. But as soon as I pull somebody's credit, if somebody else pulls their credit, well, not if somebody else, but as soon as I pull their credit, the credit companies, Experian, TransUnion, and Equifax, they sell a lot of that information. So your borrower is contacted sometimes 30, 40 times a day from random people. So we have everyone do an opt-out pre-screen prior to pulling their credit if we have the time to do it, because it takes 3 or 4 days before it takes effect. So we have them do opt-out pre-screen, which basically keeps the credit companies from sharing their information. So then it limits them getting targeted by a bunch of different lenders. Rocket, yeah. They're the first call probably. We do a list of do's and don'ts for all borrowers, just not for knowledge. I had a guy that 3 weeks ago, I told him, don't change jobs. If you're going to change jobs, make sure it's in the same field, but you don't want to go from a W-2 position to a commission position, because that could totally change how you're qualified. And the day before signing, he gave his 2 weeks notice, and he was starting in another place the day after. So he had no job gap, but we had to go back to the underwriter, delayed closing 3 days because we had to do the new job. And even though nothing really was changing, he was making more money. So we do a do's and don'ts list that basically tells them things you can do and things you can't do throughout the loan process. Large purchases, when you're buying a new house, a lot of people are shopping for the washer and dryer and the refrigerator and things like that. And if it's really tight, you might have to tell them you need to wait for that fridge until after we close.
I definitely had that happen. A dryer.
Yeah.
Set us all back for 2 weeks. I was like, wow.
It's already 11.
Yeah. You did a great job though, because there's so much we could go into with lending.
Yeah.
I just kind of wanted to scratch the surface, and yeah, those are the things that I hear the most.
Okay.
Are kind of some of those things that we just talked through right now. And then I like people just to kind of see how it all, fits together. All
oh no, we do the inspection, then we're gonna order appraisal. So we don't wanna take too long doing inspections. Or
Yeah.
we're gonna have a hard time closing on time, you know?
Yeah.
Yeah.
Okay, well, I'm happy to do this whenever you have these classes, but I can put some kind of like presentation together so that
Yeah.
people online are
Yeah,
able to look
so
at.
we have, no, I think that what you handed out here, I mean, is there any, I think that that's great. So we'll get that to you guys that are online as well.
Yeah, I emailed it to you,
Perfect.
so
Okay.
you have it.
So I can email that, I've got everybody who's online right now, so I'll make sure all you guys get a copy of Tyler's, worksheet here.
Yeah, and if you have questions on any of it, I didn't go over everything that's in here. I just kind of answered the questions that you wanted me to answer for them.
That was exactly what I needed.
Okay.
And I would say, like, just to kind of round up, if we had to pick an industry partner that I think will make or break the deal, it's the lender. I mean, be so particular about creating the relationships with the lender. Have someone, when we talk about trust, when we talk about, you know, how that's going to be a reflection on you, there's some other ones that I think, you know, maybe aren't as crucial. Nothing gets more complicated faster than having a lender who doesn't know what they're doing.
For sure.
And I've definitely been in that position before, and it's hard. So yeah, thanks to
Yeah.
Grant.
Ty, Grant's my
Sorry, I do
Taller-
that to you all the time.
taller, bald brother.
I know. You have so much more hair. Sorry, Grant. Okay, so thanks for all you guys that were online. Reach out to Tyler if you've got questions. Reach out to me if there's anything you know you want to go over with these industry partners. But it's really definitely worth, you know, your time when you're building your business to get all of those relationships created. So hope this class helped you guys. Thanks.
Thank you.
Thank you, Tyler.